Japan's Nikkei 225 is leading the gains in Asia-Pacific markets on Monday. And Chinese shares are also soaring after data showed its economy started the year on a strong note. Goldman Sachs expects the Bank of Japan to raise interest rates tomorrow, which would be the first time in 17 years. Economists are citing stronger than expected salary gains at the annual shunto wages negotiations. In China, retail sales rose 5.5%, industrial production climbed 7%, fixed asset investments rose more than expected as well, and the unemployment rate for cities came in at 5.3%. Now, despite the upbeat results, the National Bureau of Statistics cautioned that domestic demand remains insufficient and that more policy easing is necessary if the country really wants to achieve 5% growth target this year. For more on this, let's go to Wael Makaram, who is the lead strategist at XNS Financial Markets, and he joins us now live from Dubai. Thank you very much for being with us.
A very good morning.
Right, so let's start with Japan. What do you think will happen, and what would it mean to really abandon ultra-loose monetary policy for the country?
Actually, finally, we're here because it's been long awaited for the Bank of Japan to pivot to move into a normal monetary policy after all central banks has moved. And the central bank has took a lot of caution in doing this step or coming into this step. So we've been waiting for that for almost a year now. And I believe they're very cautious in order not to cause any disruption in financial markets or even the economy. Yes, raising interest rates could have an implication on the economy. However, they have a lot of room to just catch up with other major central banks and other major economies. So I don't think there would be a major negative impact on the economy for now. This is just a normalization, and I believe this is a good step going forward.
Interesting. And let's get to China, the world's second largest economy for a while, because the country's results really did beat forecasts across the board. But I wonder, is that real good figures we are talking about, or is it just the boost from the holidays? We have seen the number of domestic tourist trips and revenues growing during the holidays compared with last year. But nevertheless, is this sustainable or not?
Actually, we can't just decide after two just reports from the beginning of the year. We need to wait for more data. But the steps taken by the People's Bank of China or even the government for the past few months, they were very encouraging. They're trying to do whatever to just stimulate the economy, to pick it up more. And they have a target of 5% growth this year, which really, if achieved, would be something very good for the China as well and for markets in Asia. So they're trying the best. I believe there's still more stimulus steps to come, whether it is a drop in reserve requirement ratio or even in the prime rate. I believe they could be moving towards that in the second half if the economy doesn't respond well. We faced a lot of incidents in the Chinese economy since the past 2 years. One of them was COVID and coming back from COVID, another one was the property sector hit. So this was a little bit discouraging for for consumers and also for investors internally. And we believe that the stimulus steps taken by the People's Bank of China could just improve this confidence again, and it would drive a domestic demand further. We've seen a bit of improvement on the CPIs 2 weeks ago. It's the first increase in a while, and this could be very encouraging if sustained for the next few months to come.
All right. On your point that you were making on the coming back from COVID, we have seen something a bit different in China compared with other major economies, because why has internal demand remained subdued in China when really the major economies, they did see a post-pandemic boom when it came to demand?
Because firstly, we can see that China was the latest to come into these the normal life again. There were a lot of restrictions, and also like coming out from a major crisis from the property sector, it takes a lot for the sentiment to improve a little. And also this would mean like if you're hit on the property sector and you're just afraid of investing, and even you're just very careful on spending, so definitely this would weigh on domestic demand. But if you see across the board, we've been seeing a lot of improvement and interest in China since the beginning of the year. Just one main concern could stay there for an extended period of time, which could be any geopolitical risk that we could confront in the future. Other than that, I believe the steps taken by People's Bank of China and the government could be just more than enough to drive domestic demand higher again, and we could see better economic standards during the second half of the year.